we will be discussing the different methods for the valuation of goodwill, and here in our syllabus there are three methods. First one is average profit method, super profit method, capitalization method. Now first of all we will discuss one by one the different methods and we'll take the practical problems of those methods as well. So it is very essential that you learn the formula related to different methods, very important. So you'll be focusing on the formula, how to use that, and then we'll solve the practical problems as well. So now let us come to the first method, average profit method. Under this method again we have two sub methods, simple average profit method and weighted average profit method. The first one, simple average profit method, what are the formula? Important formula are here. Goodwill equals to average profit. Average profit, you all are well aware of this, how to calculate the average of anything, as we have discussed that in statistics in 11. So average profit multiplied by number of years purchase. Number of years purchase is that that number of years up to which the firm is expecting to earn the same profit as earlier it was earning after the purchase, 3 years or 4 years. This will be mentioned or given in the question, so we need not worry about this one. Average profit, total of profits. How total of profit of first year plus profit of second year plus profit of third year, but in case loss is given in the question, that loss will be deducted upon number of years. Suppose 4 years profit is given, so 4 will be taken as, and then we can calculate the average profit. Now always the average profit will be dependent on the normal business profit, and how to determine that normal business profit, that is also very important. So let us see how to calculate the normal business profit. So normal business profit or the loss of the past year, which will be given in the question. Now what are the adjustments to be added? So that you need to remember, these items are to be added. Abnormal losses, suppose loss due to the earthquake is there or something like that, which does not takes place every year, so that abnormal loss will be added. Loss on sale of fixed assets, overvaluation of opening stock, undervaluation of closing stock, non-recurring expenses, the expenses which are not regular basis, not on the regular basis, such expenses are termed as the non-recurring expenses, and the capital expenditure charged as revenue expenditure. So we have this discussion about capital expenditure and revenue expenditure in our 11th class also. So if any doubt is there, you may ask it. Capital expenditure which has been charged as revenue expenditure, that is to be added. Just the opposite items of these all will be deducted as well. Abnormal loss was here, so here what is to be deducted? Abnormal gains. Likewise, overvaluation of closing stock, undervaluation of opening stock, non-recurring incomes, income from non-trade investments, partners remuneration, if not deducted, then only we are going to deduct the partners remuneration, any future expense like the insurance premium. So the final answer will be the normal business profit, which will be used in the calculation of the average profit. The second sub method under the average profit method is the weighted average profit method. There it was the simple average profit, earlier we have discussed. Now here it will be taking the weighted average profit. Goodwill, how to calculate the goodwill? It is goodwill equals to weighted average profit multiplied by number of years purchase. Earlier it was simple average profit multiplied by number of years purchase. Now how to calculate the weighted average profit? Total of weighted profits upon total of weights. Not the total number of years we are going to take, but the total of weights. That will be given, the weights will be given in the question, that for the first year weight 1 is to be taken, for the second year weight 2 is to be taken. So whatever the weights will be mentioned in the question, we have to use those weights. Now weighted profit, how to calculate that? Normal business profit multiplied by weights, that will be given. Clear? So normal business profit will be calculated earlier, whatever the discussions we had. So it is very important for you to learn the formula which are here, so that we can solve the practical problems further, and that will be very easier if we know the formula, if we just read the question and the formula clicks in our mind. So very important to learn the formula, then we'll solve the practical problems from the exercise.